Hey, Chris Whitehurst from Womble Real Estate. I've been asked this question a couple of times in the last couple of days. Are we heading back to 2008? Is the market going to crash? Is the bubble going to pop again? Been asked the question so much that I thought I should just get a little short video out this evening just to kind of answer some questions. One of the things I do want to make sure I say here before I get too far into it, obviously no one can predict the future. But one thing that I can do is I watch the market pretty closely. I look at it every day, what's coming on the market, looking at prices. I read a lot, and I also do a lot of listening to podcasts and just talking to other agents. And so what that does is allows me to make a pretty good educated guess. Feel like I got my finger on the pulse of the market pretty good. But again, I wish I could predict the future because I think everybody would sleep a little bit easier at night knowing that exactly what's going to happen. The market is certainly crazy. If you know anybody who's sold a home in the last year or two, but you know that it's definitely a bit of seller's market. Sellers are getting pretty much anything they ask for. If you know anybody who's trying to buy a home, you know the heartbreak. It's multiple offer situations, and buyers are paying a lot of money for homes that just a few years ago would have sold for a lot less. But let's talk about what exactly is a bubble. A bubble is when prices rise, and that rise in prices is based on not normal economic things. Back to 6th grade economics class, supply and demand. More buyers, less sellers. Obviously, the price is going to go up on homes. Lots of homes on the market, not very many buyers. Then the buyers are going to be able to pick and choose. It's going to bring prices down. And so that's what a normal situation would happen. Anytime that we have things, we're going to talk about this later in the video, that cause not normal economic conditions to push prices up. That's what happened in 2008. Let's talk about the factors that are contributing right now to prices of homes rising up. One of the things that is, we obviously know through the COVID pandemic, we have a lot of prices that rose because people are just working from home. People who don't need to be in the cities anymore can look for homes outside of the city. That's driving prices in rural areas up. Something else, we've changed the definition of what home is. Home is now not only your place that you live, but for many people it's the place that you work. So that's changed what we use, how we use our homes, and the amount of space that we need. We also realize that if we've spent more time at home, and so people need more space, that's caused a lot of people to start looking for property. We've got a lot of new first-time buyers and younger buyers who are starting that home buying process because the interest rates have gone down. That obviously has encouraged first-time buyers to get into the game. And that, again, supply and demand is going to drive things up. Another thing that I think really impacts our local market here is we're not too far from the Raleigh, the Wake County area, which that market is one of the top 100 in the entire country. We're also in the Hampton Roads market. I think the Northern Virginia folks moving down out of that area. And the Outer Banks market is actually very, very hot. I think just those two hotbeds, or 2 or 3 hotbeds that have surrounded us, have really driven the prices of our market up as well. Something else I think is impacting is investors. There's a lot more investors who are sinking their money into residential property for rentals, and that is also driving the prices up. If you're a renter, there's also some pain that's involved in that, and the fact that the rent prices are higher than a mortgage price. That can be a very hard thing to deal with. One of the things that makes this current market not 2008 is in 2008 there was something called subprime lending, kind of predatory stuff. Banks were loaning 100% of the home value, so no money down, or higher, 125% in some cases, to buyers who might not necessarily typically qualify for these loans. What that caused is people to really quickly get upside down. They had borrowed 110, let's just do basic math, at $100,000. If you borrowed $110,000, you now owe $10,000 more than the home is actually worth. When things started to flip around and people could no longer afford those high interest rates or those higher home payments, the homes were foreclosed upon, and so they owed $110,000 on a piece of property that they could now sell for $90,000. People very quickly got upside down in their homes. One of the things that happened in 2008 is the federal government bailed out some of the mortgage industry, and they put in place this thing called the Dodd-Frank Act. There's actually a video on my website, chriswhitehurst.com, if you want to go check it out. I think I did a video and a blog on this one. It talks about Dodd-Frank Act was put into place to keep lenders from being able to do that. They put some lending regulations in, different in debt-to-income ratio for buyers to help make sure that the buyers were truly qualified for it. They also did some things as far as loan to value. You can no longer loan that much on a home. It kept people out of trouble, and it's actually really tightened the lending industry. Is a much tighter than it was in 2008. That really prevents some of the problems that we had. However, what goes up must come down. The real question is, when do things go up, or when are things coming down? I don't think we're back to 2008, but prices are soon going to have to start adjusting. The market will go through a natural correction. How fast that happens and how quickly that happens, there's a lot of things that factor into that. One of the big ones right now, everybody in the industry is talking about the interest rates. Feds have raised the interest rates, and I think that's going to make buyers' dollars won't go as far, and so sellers are going to have to come down on prices to meet them. Something else that we have to take into consideration, particularly in our market, is the amount of commuters. We're very rural. A lot of people driving into Virginia, Elizabeth City, Edenton. People spend a lot more time on the road. The money that they were saving by moving to this area, tax breaks getting out of Virginia, they're now spending that money or more in fuel cost. How long the fuel prices stay up, I think, is definitely going to have, the longer that the fuel prices stay up, the more impact it's going to have on our market. People are no longer going to be willing to drive 30, 45 minutes into work every day, or longer in some cases. I definitely think that's going to have an effect on the market. When, how long, I don't know, it depends on how long those gas prices stay up. Russia and Ukraine, the situation, the geopolitical stuff going on, that's obviously going to have an impact on the market. How long it lasts and how bad things get over there, no telling. Obviously, everybody's glued to the TV trying to figure out what's going on, but that is certainly going to have an impact. Are we heading to a bubble burst? I don't think so. I do think we're heading to a bubble deflation. I think the prices are going to come down naturally. There's going to be a more of an equilibrium that's going to start happening, and it's going to be a more even market, which honestly, even as someone who spends most of their time on the listing side, I think that's a really good thing. There has to be equilibrium. There has to be some give and take. It's a very unfair situation currently for buyers, and I think that things being evened out would certainly help everybody involved. One of the things that I do want to encourage you, if you like these videos, please like and subscribe. If you're looking at it on YouTube, somewhere around my video, there'll be a way that you can like and subscribe to any of my future videos. If you're watching on Facebook, obviously like my page so you're getting notified anytime that I come up with one of these videos. I thought about doing this live, but honestly don't trust myself live. I have a tendency to ramble. But I would like to do a live question and answer. If that's something you think you might be interested in seeing, please shoot me. If there's something you want me to cover in a future video, I'd love to do that as well. If you're a lender and could maybe add a little bit more information here, I'd love to bring you on camera. If you're not comfortable doing it live, I can certainly sit with you and go do a produced video. Maybe even a real estate agent who was around during the 2008 situation that can kind of help tell us what the similarities are and what are some things that are going to prevent us from going back there. And if you're a seller or a buyer, what you might be looking towards to help you also navigate that. I'd love to bring you on camera. Same deal. If you can do it live, that'd be great. If you want to do a more produced video, just reach out to me. The big thing here is if you want more information, obviously reach out to me, chriswhitehurst.com, Chris Whitehurst Real Estate at gmail.com or 252-312-2263. Head over to my website at chriswhitehurst.com. You can get some more information, a lot of videos on the website as well. And if you're looking for a real estate agent, I'd love the opportunity to sit and interview for the job. I feel very comfortable and confident that I can lead and guide you with the heart of a teacher through your next real estate transaction. I'm standing by when you're ready to get moving. Welcome home.